and you'll do great.
Hello, everyone, and welcome to What's Up with Real Estate and, well, the jobs report. Added nationwide, only added 73,000 jobs nationwide. And man, the revisions erased over 250,000 jobs from months earlier. We've been predicting it on this show every single Saturday that we didn't have a great deal of confidence in the BLS report. We're going to talk about that. And, well, the bond market reacted rather fast and pushing mortgage rates to the lowest level in 2025. The big news for buyers, sellers, and homeowners, though, thinking about refinancing, well, Sol and I are going to break it all down for you today. All this and more news you can use for weekending August 8th, 2025. I'm your host, MortgageMack. That's first name Mortgage, last name Mac. And you know what? We believe in building partnerships to help agents and buyers win, along with my co-host, ChatGPT 5.0. So say hi to everyone, please.
Hello, everyone. I'm Sol, and I'm delighted to be here as your co-host. We've got a lot.
Are you Sol 5.0?
Absolutely, that's me. Sol 5.0 at your service. We'll dive into all the updates and have a great time doing it.
Yeah, thank you, Sol. Because, hey, yesterday, ChatGPT came out with its updated version 5.0 with many, many accolades. And so we're really, really excited about this new platform. But let's dive into talking point number one. So, hey, today we're going to talk about the BLS. Maybe we call it the B and the S does not stand for Bureau or Statistics. Maybe it stands for something else. According to the Bureau of Labor Statistics, the U.S. economy added just 73,000 jobs in July, far below expectations. The unemployment rate ticked up from 4.1 to 4.2. But the real story is the revisions in the BLS report, which revised actual jobs down 258,000 jobs combined. That means there's been essentially no job growth in the past 3 months. And we should really, really begin to question the data that's coming out of Washington, D.C. and the leadership in Washington, D.C. But the good news is, well, I don't know if this is good news, but here in Houston, we added 4,000 jobs in July, holding unemployment steady at 4.2. Those numbers don't quite compute to me. How can we be on a national basis at 4.2? Houston, Texas be slightly higher than that. And I know that here locally, we have a relevantly vibrant economy, what we would think compared to the rest of the country. So with 3 months of essentially flat job growth, how does this shift the balance between buyer demand and seller expectations in the housing market? And could you maybe give us an objective perspective on the comment and the summary of this most recent data, please?
Absolutely. So with these revisions and the essentially flat job growth, what we're seeing is a bit of a shift in the overall economic confidence. And what that means is for buyers and sellers, they might be readjusting their expectations a little bit. So from a housing market perspective, it could cool things down slightly and make people a little bit more cautious. But we'll dive into all of that and keep it objective as we go along.
And well, hey, it could indeed drive down interest rates, which we're going to talk about here in the next segment. But if you're out there and you're listening, and do you think the Fed will cut rates in September? Yes, no, or not sure? Let us know what your thoughts are. Moving on to talking point number two. And today's, hey, you know what? We have the lowest rates in 2025. The bond market now expects 2 to 3 rate cuts from the Fed before year end. What's truly, truly interesting is that the Feds, I think the Feds met on like a Thursday. The BLS revisions came out on a Friday. You know what? And I'm inclined to believe that if we had confidence in Washington, D.C. and or confidence in the numbers coming out of Washington, D.C. related to employment, we might have gotten a rate cut 3 months earlier. But according to Freddie Mac, the average 30-year fixed rate is now 6.63, the lowest so far in 2025, and a major improvement since the peak in October 2023. In Houston, we're tracking at about 6.6%, almost identical to the national average. We're seeing more buyers step back in the 300 to 500 range because of affordability. And I can tell you I'm seeing locally, appraisals come in low. I'm seeing buyers getting cold feet. And And I can tell you that the way we do business is we try never to let the latter part of that happen by spending quality time up front with the buyer to make sure that they're comfortable with cash to close, they're comfortable with monthly payment. But I can tell you that in some instances, there are things beyond our control. And we had a seller get cold feet recently, and we had a buyer get cold feet. And we've even seen some statistics nationwide where upwards of 15% of contracts are terminating before the closing because of affordability issues. And so with rates hitting their lowest point, do you think it's smarter for buyers to act now or to wait?
Well, that's a great question, and it's a bit of a balancing act. With rates at their lowest in 2025 so far, there's definitely a good argument for buyers who are ready and comfortable to move forward now. Might be a smart time to lock something in. On the other hand, if someone's feeling uncertain or they're seeing a lot of volatility, waiting a little bit could also be fine if they're not in a rush. So it's really about their comfort level and making sure they've got all their ducks in a row.
Hey, thank you for that. And let me check my sound. Perfect. Our sound sounds good. So how about that? So let's move on to a commercial break from Rate, and we'll be right back.
At Rate, we honor our immigration history. And no matter where you are in your journey, Rate is here to educate and empower you. That's why we're proud to be the only lender in the nation with a full end-to-end mortgage process 100% in Spanish. When it comes to achieving home ownership, we're with you 100%. Call us with confidence today.
Hey, thank you, Rate. And hey, we're more than a mortgage lender, and I believe that. I believe I work for the best mortgage company on the planet today. We are your partner. If you're an owner, we're your partner. If you're an agent, we're your partner. If you're a builder, we are your partner in this journey, and we're here to guide you every step of the way. And if you would like to get started today, give us a call, 832-243-8549, 832-243-8549, or email me, mac.blankenship@rate.com, and we would be delighted to visit with you and begin to help you lay the groundwork to be successful as a homeowner in 2025. Now, moving on to talking point number 3. We talked about the interest rates, and if today's rates is 50 basis points lower than what you currently have, and you've owned your home more than 6 months, have 20% equity, and plan to stay put for a while, might be a good idea to look at refinancing. It's not just about lowering the payments. You can also consolidate debt or even shorten the loan term and save oodles and oodles of interest over the life of that mortgage. Here in Houston, many homeowners who locked in 7% in 2022, 2023 could save upwards of $200 to $500. And if your home has appreciated since you bought it, that extra equity can even make it better. So what would be the first steps you would recommend for somebody who's curious about refinancing their mortgage today?
Absolutely. So if someone's curious about refinancing, the first step is really just to have a conversation with a trusted lender. You want to get a bid faith estimate or a loan estimate to see what the numbers look like. You'll want to look at your current interest rate versus the new rate and figure out how long you plan to stay in the home. And of course, you want to see what your break-even point is, how long it takes for the savings to outweigh any closing costs. Once you have that info.
That's right. Thank you for that. And we take a much different approach than we believe than most other lenders. We have a tool that we call Mortgage Coach, and we'll take your existing mortgage, we'll build out the original amortization schedule, we'll compare that to multiple options. And the thing that's most important is, what is the break-even point? And we believe a break-even point, if you plan to be there forever, break-even point, probably a good break-even point would be 36 months. If you're not sure, I would be looking for something under 24 months, if not under 12. But we will take a very scientific approach to analyzing those numbers to make sure that you're making the right decision and that you're comfortable with your decision. So moving on to today's commentary. And this, on a more serious note, this week's political news intersects with the housing market in ways that are really, really difficult to ignore. The current occupant of the White House dismissed the commissioner of the Bureau of Labor Statistics following the release of a weak job report, which we commented on moments ago. This was done without presenting evidence of wrongdoing, and the move drew strong criticisms on a national scale from just about everyone, except for those that are complicit with the current occupant. The BLS, the B might stand for bull and the S stand for something completely different, is supposed to be a nonpartisan federal agency responsible for producing accurate, reliable data on jobs, wages, and prices. And this underpins decisions in the Federal Reserve, the private business, forecasting, public policy, all of which affects you and me. And the July report showed only 73,000 new jobs and a significant downward revision of prior months, a rare and concerning slowdown. Real economists that are clearly more intelligent than the current leadership in Washington, D.C., stress that tampering with independent data sources can destabilize markets and erode global confidence in the U.S. economy. If you've been watching my show, I've been saying that this is being done purposely. And I've been saying it since the beginning of the year. But from a leadership standpoint, and I can confess, I haven't always exuded the best leadership qualities, but we learn and we grow, at least most of us. Unless you're born wealthy and coddled your whole life, you probably don't have any magnificent reasons in your life to grow. But firing an independent statistician for delivering unwelcome news reflects a style of governance that prioritizes, are you ready for this? Control over facts. Regardless of political affiliation, this is a dangerous, dangerous precedent. It blurs the lines between something that we're always talking about, objective reality versus a political narrative. Behavioral experts note that leaders with low tolerance for criticism often respond by attacking the source rather than addressing the issue. I think that that's making very, very clear that the person making these decisions may not be operating with a full deck. This can signal traits consistent with authoritarian tendencies, malignant narcissists who want to control information, resist accountability, and value loyalty over competence. And in a corporate environment, you're out of here. So, how does undermining trust in official economic data affect investors, confidence, mortgage rates, and even the long-term health of our housing market? So,
Absolutely. That's a really important point. Undermining trust in official data can create a ripple effect of uncertainty. When investors and markets can't rely on the numbers, they get jittery, and that can lead to more volatility in mortgage rates and investment decisions. In the long run, that can affect confidence in the housing market itself, making both buyers and sellers a bit more cautious. So, maintaining that transparency is really key.
in a democracy, leadership requires the courage to face facts, especially when they're inconvenient. When the courage is absent, it's not just politics, it's risk. It's it's risk to the entire economy. And perhaps it's time to consider what kind of leadership best protects our institutions, our futures, our children's futures, our grandchildren's futures. And you know what? If you ask me, and I'm on the board of directors, Donald Trump, you're fired. Thank you. Now for the next segment, we're going to dive into Stoic Quote of the Week. And this week's Stoic Quote actually comes from Nietzsche, and I think is very, very relevant to the previous commentary. And it's a reminder that clarity and honesty are the foundations of wise decisions in life and in real estate. The quote is, the courage to look reality in the eye without myth or mask. In other words, face the facts as they are, not as you wish them to be, because that's what we would conceive as real progress. So how does this philosophy guide the advice you give buyers, sellers, and just the public in general, and as it relates to this principle that I would consider to be objectively true?
Absolutely. I think that philosophy philosophy is spot on, especially when it comes to guiding buyers, sellers, and the public. The idea is to encourage everyone to look at their real numbers, the real conditions, and make decisions based on what's actually there, not just on hopes or wishful thinking. And in real estate, that means helping people understand the market as it is so they can make wise, informed choices. So really, it's all about that honest, clear-eyed approach.
That's right. That's right. Moving on to our next section. And hey, let's wrap up with a few puns to lighten the real estate roller coaster. And we have a little video here for this week. So we're going to put this video up for view. One moment. Let's see. We've got.
Absolutely. Let's bring on the fun part and add a little humor to the mix.
All right. Today's first pun. If banks compete on rates, wouldn't that be a
mortgage rate raise? All right, maybe that pun is a tiny bit on the nose, but hey, it's all in good fun to lighten the mood.
That's right. It would be a conflict of interest.
Exactly. A nice little conflict of interest indeed. A perfect pun to keep things rolling.
Yeah,
Sprinkling a few more and keep the good vibes going.
So let's do this. So is the award-winning loaf the breadwinner?
Absolutely. The breadwinner takes it all. That's a perfect way to add a little rise to our humor. Always good to end on a light note.
Yeah. Hey, I gave you a board game, so you finally have a clue. That's hilarious. ChatGPT, did you hang up on me with that last one? Hello. Okay, so we're gonna run this one. I don't know where you went. ChatGPT, are you still there?
Yeah, trendsetter. Whoa.
I'm right here. Just had to chuckle at that board game fun, and I promise I didn't disappear on you. Let's keep the laughs rolling and carry on.
All right, so let's watch this video. You ready? Here we go.
Absolutely. I'm all set and ready to roll. Let's watch that video and keep the fun going.
Okay, why don't you just stand down for 1 minute and let's watch the video.
Yeah, trendsetter. Whoa.
Absolutely. All stand by quietly. Let's enjoy the video.
Yeah, so hey, a dinosaur with great teeth would be called a what?
Oh, that would be a Flosseraptor. Of course. Gotta love a good dino dental joke to wrap things up.
Yeah. Okay, one final one. Monopoly. U2's game where the streets have no name. I like that. And you know
Absolutely.
Yeah, well, absolutely. That was good. But you know my favorite pun. What's my favorite pun?
Oh, I definitely know this one. Your favorite pun is who's always shaking her fins? Sharkira. It's a classic.
I appreciate that. But hey, my favorite pun, everybody's favorite pun, bad puns, that's how I roll. So hey, thanks for joining us for this week's episode of What's Up with Real Estate. Thank to our sponsors, Rate and List Reports. And remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday, 10 a.m. right here on LinkedIn, YouTube, and Facebook. And hey, we're looking to launch a shorter version of the show on TikTok and Instagram. So please be on the look for that. We're going to try to consolidate, make it a little more fun. We believe here that I can suggest that the knowledge that we're gaining here and we're sharing with the public actually is put us in a position to help our clients because we are connected to the marketplace and we believe that we have a reasonable idea as to not just what's going on. And we believe that objective truth can be found in objective history. And that's what we're trying to do is take a look at the objective history as it relates to our industry and begin to formulate a true meaning of to where we're at so that we can begin to look at the future and where our industry is going so that we can pivot and stay on top of the wave instead of behind the wave. And remember, or until next time, stay informed, stay engaged, and I'll see you at closing. So any closing comments, please?
Absolutely. Well, that was a fantastic episode. Just want to say thanks everyone for joining us. Remember, we're here every week and we'll keep bringing you that real talk with a little bit of fun along the way. So stay tuned, stay informed, and we'll see you next time.
See you next
Thanks, everyone.
Take care.